Unethical but legal ways to thrive in a broken Britain. When a rogue builder walks off the job or an online store goes bust with your money, stop chasing them. Hold your credit card provider directly responsible for the bill. This asset protection isn't a modern policy, it is a statutory right under Section 75 of the Consumer Credit Act 1974. The law explicitly states that the lender and the merchant share equal joint liability. If a merchant breaches a contract or misrepresents a service, the bank is legally responsible for paying you back. This is not a voluntary customer service scheme your bank can choose to ignore. It is a non-negotiable legal obligation. Invoking this 1974 statute flips the power dynamic. It shifts a standard customer dispute into an ironclad legal demand that the bank's underwriters cannot deflect. To trigger this financial shield, you only need to meet specific statutory criteria. First, the transaction must be processed on a genuine credit card. Debit cards and charge cards hold zero legal weight under this specific act. Second, the total purchase price of the single item must sit exactly between £100 and £30,000. The statute applies strictly to the individual item value, not the collective basket size. Stitching together multiple small transactions totaling £150 fails the criteria, but a single asset worth £150 unlocks the protection. Auditing the exact line item values on your purchase invoices is the only way to guarantee full financial recourse when a business collapses. But here is the real loophole. You do not need to fund the entire transaction with your credit line to weaponise the law. Paying just a single pound of the deposit on your credit card automatically shields the entire residual value of the contract. If you pay a £1 deposit for a £10,000 vehicle and the dealer vanishes, your credit card bank is legally bound to refund the full £10,000.
Section 75 protects the total cash value of the goods, not just the portion you put on the plastic. The law does not limit your recovery to the micro balance of credit you actually swiped at the counter. Leveraging this deposit tactic allows you to secure massive cash purchases without carrying heavy credit card debts or paying interest fees. For the statutory shield to hold, a direct transaction link must remain between three distinct elements: the consumer, the bank and the supplier. Direct invoices keep this legal line intact. However, processing your payment through third-party platforms like PayPal fractures the link completely. Introducing an unauthorised middleman strips the bank of its statutory liability. The brief convenience of a one-click digital checkout completely voids your strongest consumer defence. The exact second you report the dispute, the bank's frontline staff will script you to go back and resolve it with a merchant. You must flatly reject this instruction. Inform the agent clearly that under the Consumer Credit Act, their institution holds equal joint liability for the breach. Refuse to accept a voluntary standard chargeback request. Explicitly demand a formal Section 75 claim pack. To submit the file, provide your statement records proving the initial card transaction occurred. Then attach clear evidence of the breach, supply photographs of the uncompleted works or email logs showing the trader has vanished. Using precise legal terminology, shifts your file out of the automated customer service tray and directly onto the compliance desk. Once the baseline proof is verified, a legally cornered bank has no statutory defence. They must refund your capital in full. Because these refunds are only triggered by consumers who actively cite the statute, banks keep their liability low by counting on the public's lack of knowledge. Mastering these parameters steps you clean past the broken consumer complaints channels. You are now running the exact same regulatory playbook the lenders use to protect themselves. Stop taking the financial hit for rogue businesses. Follow for more Broken Britain acts.